fair market values of the accounts. What does that mean? Why is it important? And why are you here today to listen to us talk about this? Fair market values in self-directing terms pretty much means that you want to assess that your account's value is accurate as we go into the new year and start doing our IRS reporting. Kerry, thank you for jumping on with us today. How are you doing today, sir?
Doing right. Doing great. It's cold here too, over here in Albuquerque, New Mexico. Woke up to about 11 degrees, so
Ooh,
it's pretty chilly here.
yeah, that cold is definitely hitting across the nation right now, so everyone's definitely feeling it. My guy. Well, Carrie, thank you again for being on with us today. As I mentioned for everyone, Carrie is our asset and compliance manager. So anything relating to assets and compliance of self-directed accounts, we typically go to Carrie as our first line of defense in the company, and he tries his very best to assist everyone, both clients and team members alike, to ensure that we are giving you the most accurate information. So, with that said, I will actually start with our disclosure that we do always have to have, just kind of a compliance standpoint. Thanks, Carrie. Horizon Trust Company is a passive custodian and, as such, only performs the duties of a custodian. Horizon Trust Company does not provide advice, sell investments, nor offer any tax or legal advice. So, with that kind of being said, we have a very specific role here at Horizon Trust. We are not allowed to give you the financial advice, as I just stated. And in regard to your account, we cannot assess your account's current value. We need you or a third party to provide that information for you. I'm talking a lot with my hands right now, but this is the first time I'm face to face with the camera, and the laptop is hiding my pointing. So I might need to move my laptop off to the side here so it looks a little bit better. There you go. Um, anyways, but yes, so for those of you joining us here today, the fair market values of your accounts, that's going to be our conversation today. And what they are, it's just making sure that your account's value that we registered as of December 31st is accurate. If that is inaccurate for any reason and you need to make those updates, that's where you would go to our website, and we have our fair market valuation sheet that you can complete. Now, there's various aspects of this sheet that will go into what you can and can't complete, and if you need a third party to help facilitate what that is on completing the actual value. But that's where Carrie's here, and he's going to help answer those questions. The reason why we're doing this today is because at Horizon Trust, we do have a deadline. And it coincides with the IRS deadline. But for us, just to ensure we have sufficient time to work with you and make sure that everything is done correctly, our deadline is March 31st. And March 31st is just because we want to make sure we're done and that your assets and accounts are cleaned up and that their values are reflected accurately by the tax deadline of April 15th. So that's just something that you want to keep consider, that if you are an existing Horizon Trust client, that your accounts and that these farm market valuation worksheets that we're going to be talking about today are done, completed, all supporting documentations and everything submitted by March 31st, just to ensure they all get completed. Anything on the basics there that I missed right there, Carrie?
I don't think so on the basics. The form itself is a good starting point. If you have questions, it has a lot of information. It's a few pages. It has information on what we're asking for, why we need it, as well as some information on the if certain type of assets you have, what we're looking for as documentation to back up those values that you're trying to change.
Absolutely. Well stated, Carrie. Our form has been built out by Carrie and our compliance team over a number of years. So it's had updates just to ensure that it makes the most sense. And we'll still assist you if you need it. If it doesn't make sense, we can talk with you, or if you submit a form and we need more information, we will work with you on letting you know what that information is. But the form does have that great value there. So I guess one of the things, Carrie, we'll start off with now is what the FMV's role actually is in regard to retirement account compliance.
So the FMV itself, is a fair market value, and that's not say what it could be worth. It's basically what someone is willing to pay for it and what is another person is willing to sell it for. So that value is kind of that in between. It could be worth more, but it could be sold at a certain price. So fair market value is, assessed by a third party most of the time. They can give you documentation to back that up. And in a compliance role, as the custodian, we are required to report any IRA value as of the end of the year. So if we want to get those as up to date as much as possible, and that's why we send those out in January. We send reminders, and we want to get as many people to reply and send back the information that we can to get all our systems up to date.
Absolutely. And with those January reminders that Carrie just mentioned, folks, for those of you that are watching, we normally get this question quite a bit. Will this webinar be recorded? Yes, the webinar is recorded, and we will have a replay available for you that will be available on Greg's YouTube channel. So you can search at Greg Herline for that. And we'll have that replay also be able to go out with that FMV reminder email. So if you are an existing client and we do contact you regarding your fair market values, this webinar will be a part of that email so that you can reference it if you have any questions as well. And always feel free to contact our concierge team. We'll be able to assist you there as well. So Carrie, in regards to the FMVs, how important is it to the account reporting, and why is the accurate value so essential to the retirement account?
So like I said, we are required to report that every year, and the more accurate they are, the better. The IRS does not like stale assets, they call it, where the value does not change over a certain amount of time. And of course, some do, like maybe private equity or some sort, but most of the time over a year span, there's going to be fluctuation, and we want to make sure that we're as accurate as possible. So we want to make sure the IRS is happy. We don't want them to change rules or qualifications for self-directed IRAs based on, some problems that they may see happening. So we try to get those as much as possible to be submitted and keep everything up to date. So um, the valuation reporting, like I said on 5498s, is something we have to do. And so, the more accurate, the better.
Yeah, absolutely. And that, like you mentioned, it's all pretty much IRS regulations. So on this, what is the kind of penalties for non-compliance? So if someone isn't updating their account, what potential penalties can they face from the IRS from not updating their account?
So right now there are no official penalties. We have heard from certain corporations like RITA, the Trust Industry Association, that there may be something in the works from the IRS. It's a very unique subject that they are trying to, maintain the correct qualifications. So there's nothing currently that would be wrong, but they are also they're kind of not forcing, but putting pressure on custodians to make sure that those are up to date. They are giving us the responsibility to make sure that those are up to date. And if they're not, eventually they may have some sort of IRS regulation with penalties that have stale assets in it if we don't handle them accordingly, or if we're not making sure that those are submitted correctly.
Interesting. Okay, I actually wasn't aware of that. So I understand that for most of it, it's just wanting to ensure that your account's value is reflected as accurately as possible. You want to be able to go in there and take a look at it. If you opened your account with us 5 years ago and you made your first investment into, say, an LLC, and you haven't done anything since, that's fine. Your LLC is active, and we hope you are having great success. But that's interesting to know that you know the change might not be reflected there from those 5 years. So I guess in that example of an LLC, Carrie, and I know we could go into various examples, but what are some of the common asset types that you see clients submitting a fair market valuation for, that they're either able to do themselves, like a checkbook LLC, or something where they need a valuation agent to assist with?
So our form does have a valuation agent signature, a third-party evaluator. We want to get someone at arm's length to sign off on the valuation. A lot of popular investments outside and inside LLCs is real estate. And that could be a rental, it could be flipping homes, commercial loans, or even private loans for real estate. That's a big one. We do a lot of private stock for startup companies, you can get those valuations directly from the investment company you're working with. They should be able to provide you with, your stockholder value at a percent of ownership if that's what the investment is. They're doing that already for their tax refund or tax return filing for their company itself. But like I said earlier, the form that's on the website has a lot of specific investments and what we ask for or what is available to get for that. But real estate is actually a very popular one. So we have a lot of real estate investments, and you can get that from a realtor, an opinion letter. We do accept online comparative analysis of other homes surrounding that house. So that's a lot of stuff that we accept.
Yeah, and for those of you that are, I've worked with Carrie in the past with these, and those real estate, like he's mentioned, ones that we generally do see from online sources of just neighboring homes. They match your homes in size, bathroom, restroom, or I'm sorry, bedroom, restroom, and square footage, and they relatively work as long as your agent is able to provide that information as well for you. One of the things I want to focus on, Carrie, as well here is because we do have a lot of clients who have a checkbook LLC. They use it to have a little bit extra control in their retirement account. Since we're already self-directed, they just find the checkbook LLC to be a little bit easier. So I want to spend a little bit more time on the checkbook LLC factor of what it takes to ensure that your LLC's fair market value is assessed properly.
Sure, and that's actually a big topic, and a lot of questions come up with that every year because people don't really know how to kind of submit everything to us. Um, so the asset that we hold in our system is the LLC. That's the investment. So your fair market valuation form should reflect the total value of the LLC. Sometimes we get clients who submit 3 different FMV forms with 3 properties that are inside the LLC, which usually is okay as long as we get the total value. But the FMV should reflect the full value of the LLC. And if needed, if multiple assets are there, you can submit like a balance sheet that I call it a spreadsheet with the assets listed as well as the values that you have, including, if there's real estate property, any mortgages that may be available that would lower the net value, and then bank statements for liquid cash that you have for the LLC. So whatever totally encompasses the LLC should be included on your spreadsheet as well as the total end value. And then after that, you can provide the documentation for each value you've listed on your spreadsheet. So property investments, bank statements, mortgage statements, things like that. So it all kind of encompasses the LLC and you get all the information that we need.
Absolutely. And one of the reasons why I also wanted to focus on the LLC there is because we do, apart from having a large number of clients that do the LLCs and the number of questions we get every year about them, is also just how much simpler the process is with Horizon compared to some other custodians. We have looked at other custodians for their FMV process and have found that there's other custodians who require you to use a CPA or a financial advisor to submit an FMV for an LLC. We at Horizon Trust don't require that. You are the evaluation agent of the LLC, and you can submit the FMV yourself as the manager of that LLC. And that is a cost saving attribute that we have here at Horizon Trust because you're able to do that. You still want to ensure that you have proper reporting of all of this. So, like Carrie mentioned, if you have real estate and all those types of investments in your LLC, you want to make sure that that value is reported accurately. So, working with a realtor or someone that you know that works in the industry and can give an accurate reporting of the property would be the ideal scenario. But that might be something that doesn't cost you comparison to other companies who require a CPA, realtor, or someone else to complete the form on behalf of your checkbook LLC. So that was definitely one of the points that I wanted to talk about. And as mentioned, we do have this form, the fair market valuation worksheet, available on our website. So existing clients, you can go in there and check it out. Horizontrust.com. It's listed under our forms section, and you'll be able to search for it, fair market valuation. Looks very similar to this. You may or may not be able to see it on screen, but I just wanted to have a copy on hand because, like Carrie mentioned, we do have two full pages of information. The worksheet itself is actually one page to be able to write out the asset value. We do need supporting documentation along with that page, but 2 pages of the 3 page document is just information on how to complete it, what information is needed, and anything else like that. It looks like we have some questions coming into the box, so let's take a look and see if there's anything that we can answer as we're getting started. Let's see. One of the questions that just came in, Alicia, can you assist with that? Let's see. Does the info on the solo IRA apply to the solo K? Yes, Stacy. Anything that we are talking about today is in regard to a self-directing account in general. So that could be any type of account, whether it's a solo K, Roth IRA, traditional IRA, SEP, simple, any type of account that we hold here at Horizon Trust. It is a self-directed account, and therefore would need that fair market valuation worksheet to be completed. Suman Hong is asking this question, and Carrie, I believe this one's going to go to you. Do we have to worry about UBIT, UBTI, and UDFI with the SDIRA when they are triggered?
Suman, yes, you do have to worry about that. Obviously, that is under certain circumstances, like an active business or debt within the plan. And that is something that we can't advise or assist on. That is something that would need to be done with a legal professional or CPA to make sure that if it is triggered, it is definitely reported, filed. If there's a payment that needs to be made, it can be made from us, but all the documentation would have to be prepared beforehand. Unfortunately, that's a very technical process and would need to definitely have a professional do that.
Yeah. And Carrie's able to help assist those questions. So if there are more questions about that, he's definitely one, along with the rest of our concierge team, who can help answer those questions even more. Larry's asking a little bit of a longer question here, but let's see, wants to know how to use the money from his solo K that he rolled over from the stock market and invested into real estate through a Checkbook LLC. So for that, Larry, you're just going to want to start a Checkbook LLC if you don't have one already. I'll have my team drop a link into the chat where you can book a call with our team if you're an existing client or if you're looking to open an account. From the sounds of it, it looks like you're an existing client. So you can schedule with our concierge team, and they might be able to connect you with our reps or assist you. But right there, you'll be able to start that Checkbook LLC to then make your investments into real estate. It looks like you may have taken a personal 401k loan, which is fine, and you're paying it back. So that's perfect. That's how the 401k loans operate. But apart from that, the LLC, you just need to start the LLC if you haven't already, put money into it from your 401k, and that'll allow you to start the process there to invest into real estate.
Yeah, and I do believe he says, how do we really be able to use a checkbook LLC? That is pretty, it's a pretty simple process. The checkbook LLC is managed by you. You are in charge of it. It's a vehicle to use your IRA or solo K funds without having to come through the custodian. Technically, it's sheltered under the plan, but you manage the checkbook LLC, you manage the bank account, and you manage signing for investments. So once that's set up, you have the control. You don't have to come to us to make the real estate investments, and you can use the funds available there to make those investments.
Thank you, Carrie. Yeah, I did miss that part of it right there. Um, let's see. A question just came in as well after that. Says, am I able to use, this is from someone else, am I able to use uninvested cash in my Horizon account to pay my loan in addition to the scheduled loan payments? I believe if that's referring to a 401k loan, that's going to be a no, correct, Carrie?
Yeah, it's a little ambiguous. I'm not sure specifically of the loan, but if it's a personal loan from the 401k plan, you are not able to use uninvested cash to pay that.
Yeah, awesome. And then Let's see. There's a lot of Checkbook LLC questions. Also, we've seen some comments about volume. I hope you guys can hear me a little bit better. If you can't, just let me know, and then we can try to raise the volume up a little bit more. But let's see. Greg's asking, can you own more than one Checkbook LLC? One for stock and one for real estate, for example, that are both owned by my Roth with Horizon? Yes, Greg. You can own as many Checkbook LLCs as you want if you want to have them to separate your assets. So the LLC, for those of you who may not know, is a limited liability company. So that ensures that any assets or investments that you have within the LLC are protected by that LLC umbrella. And pretty much if there's a legal action that may get taken against the LLC, it stops at the LLC. So it helps protect you. You're going to want to speak with a financial advisor or attorney just to reconfirm and make sure that that is the best option for you. But once you do that, we can definitely assist you in setting up multiple checkbook LLCs just to ensure that all of your assets are separated if that's how you want to have your account. So back to some of these questions, Carrie. What are some common mistakes that you see when you're getting some of these FMV submissions?
That's a broad question, actually.
Yeah, sorry about that.
No, it's okay. We can go over a lot of them. Sometimes people will submit the FMV form completed, filled out, signed, but without backup documentation. So we do want to have both. I know it may be signed by an appraiser or an evaluation agent, but we need the documentation as to where that number came from. So that's a big one. Incomplete documents where we may get some of the information that's available for the total value, but if we can't calculate it here the way that you did or your evaluator did, it's going to cause problems, and we may push back on that. We don't also want to use, a big one we get is tax statements or valuation statements from the county if it's real estate. Those are usually either very low or they only value the land and not like the actual structure or building on the property. So we try to avoid those. Those are usually not the best valuations, but those are some of the things we push back on. So there's probably more. I could go into more detail, but
Yeah, no, and those are some great prime examples of some of the common ones that we see. So I wanted to kind of cover those as well for people to know of what to ensure you're not doing, so that way your documents are completed as soon as possible. Because as I mentioned, so we do have that very strict timeline. We have to do our reporting to the IRS by the tax deadline, which is why we have our requirement of forms due by March 31st. So our reminder will be going out shortly to submit your fair market value. And then from there, you roughly have 2 months. And some people might think, oh, 2 months, that's plenty of time to do this form. But as we all know, life kind of gets in the way. And before you know it, a month has gone by. How many of you have realized that we are 3 weeks into the new year? It seems like just yesterday we were starting December. So time really does fly, and it's just something that you want to keep in mind that the sooner you get it, the sooner that you submit everything, the more time you have to turn everything in and just have that peace of mind that your evaluation has been done, that Horizon has accepted it, and that your account will be updated to its accurate reporting value for the IRS. So that's just something that you want to make sure that you're keeping in mind. And Carrie, so with that timeline stated, what happens if people do miss that March 31st deadline?
so that is an internal deadline. I don't want to say that it's not an IRS deadline, but it's not. We do want to have those as soon as possible. Basically, that guarantees that if accepted, we will change that as of the end of December 31st, or as of the end of the year, December 31st of the previous year. After that deadline, we are working on those as much as possible. There are hundreds and hundreds that come in. So we will try to make sure that's updated as of the end of the year. We can't guarantee that. So we will, work through all of them that we get even after that deadline, but they may not be updated as of the end of the year. It could be the current date depending on when we get it. But we try to do as much as possible. But that is a helpful deadline for us to make sure, like Alex said, that the reporting is correct, it's done on time, and it gives us time to make sure that we can get those submitted to the IRS on a timely fashion.
Um, and then what are situations with like illiquid assets or assets in foreign markets? I know some clients have like crypto accounts and things like that. How would you evaluate something like that?
Um, I mean, crypto is pretty easy. Most of the wallet uh, companies that offer that will provide a value as of the end of the year. They follow that pretty strictly, even on a minute to minute basis. So that's pretty easy to get from them. And obviously, that's not from you, that's coming from a third party. So that would be available as a statement for crypto. Illiquid assets, depending on what they are, there's usually a way to find out a value. And it really depends on what it is. If it's, precious metals, that could be, a spot price on a website. It could be from a broker saying that they would pay this much to buy them back from you. So it really depends. And it's a vague answer, but there's so many different assets that it would be a lot of different answers to that question, honestly.
Yeah. And I guess that kind of goes back to the timeline of making sure that you're submitting all of this with sufficient time. So that way, if the documentation you've provided is vague, that we can tell you with sufficient time so that we can try to get this corrected. Right, Carrie?
Yeah, absolutely. We review them all as they come in. We try to process them as they come in as well. Like I said, there's hundreds and hundreds that come in, so give us a little bit of time. But if we process them and we get them completed, we will send you an email that says it's been completed. If we are seeing some discrepancies, if we're missing something, we will email you to notify you that. And you can always call in to get specifics. Our templates usually aren't too specific, but we kind of give you a vague or a general idea of what we're missing. But always let us know if you have questions on that.
Yeah, absolutely. One of the questions that came in from Sumin in our Q&A is if Checkbook LLC loaned money to a fix and flip deal earlier this year and hasn't been paid back, do I include interest payments and principal from that lending deal in the FMV form?
So without knowing the specifics, basically we want to get a value of the investment. So if they're making interest payments, you don't need to include the interest payments in the value of the investment because that's probably going to be included in your bank statement because that's going to be cash that you've received as payments. If this is interest that's just accruing without payments coming in that they're supposed to say pay back when the property is flipped, that can be included, and that should be on with some sort of amortization schedule or included in the loan documents that says it's accruing for this interest rate for this amount of time, and you can provide us the total value and how those calculations were met. So depending on how it's being paid or if it's being paid, then those can be included. But whatever value of the investment itself should be provided so that we can reflect that.
Absolutely. Um, and then another real estate question that I see just came in, um, which I'm almost hesitant to ask, but you all see it, so I'll ask it. Can we use Zillow or Redfin or something similar to value our rental houses?
It's not my favorite, but we do accept that. A while back, it wasn't very good, but they do use comparative analysis. They look at the surrounding houses, the neighborhoods, to match up with the kind of value that the property you're looking into would kind of fare. So we do accept it. It is an acceptable means to submit.
Yeah, absolutely. Um, and that's why I wanted to ask. I know that in the past it's something that we've looked at and we've identified, and that's where a real estate agent might be able to assist you and give you a broker's opinion with the properties. Um, and they might use that as well to come up with the pricing. But when it's coming from them, they've assessed that with their expertise and background that it's something they can do. Um, Larry's asking, and I don't want to read Larry's full question just because there are some personal information on there regarding his loan. Actually, it looks like he put it in the chat and in the Q&A regarding his 401k loan. So he has paid back about $10,000 of it. He said, what happens to that money that was already paid? Does it go back into our account? When does it go back into the solo K account? So yes, Larry, when you are making your monthly payments, that entire value is going back into your solo 401k. So you are then able to use that money for your next deal once it's available. So if you've repaid this loan for about a year now, I think is what you said, and you now have about $10,000 back in your account, then that $10,000 is now available for you to invest either through a Checkbook LLC or make investments directly out of your self-directed 401k. So for that, Larry, I'm going to recommend that you schedule a call with our team. They'll be able to help answer your questions and get you set up with either that Checkbook LLC or finding kind of what the next step is to complete your next investment, whether it's completing our direction of investment form and whatever supporting documentation might be needed to complete that investment.
Just real quick, something that stood out that I think people get confused with. The LLC that is held in your solo K that holds the fund is not technically your solo K account. Your solo K account is held at Horizon Trust. It's a retirement plan. The LLC is a vehicle to you to have personal control over those funds and investments. So I think what Larry is asking is when can he move it back to his solo K account? I think he's asking when he can move it back to his LLC. And you can do that at any time now, Larry. We have a direction of investment form like you did originally. You can send it to us to send either all or a portion to your LLC account for more investments.
Thanks for the clarification, Carrie. Someone's asking this, and this I want to just briefly touch on it, just to see if maybe you have some insights on it, because I know it's been kind of a crazy topic for the past couple of months. Is there BOI filing required for the Checkbook LLCs?
That has been a hot topic. Originally, the BOI filing for anything prior to 2024 was due at the end of 2024 or January 1st of 2025. That has been a
Uh-oh. Uh-oh.
I
You
just got
good?
knocked off. I'm here. Sorry.
All right, you're
It
good.
just
There
went
you are.
blank. Anyways, I'm not sure how much you caught, but it is a hot topic. The filing was required for anything prior to an LLC opened prior to 2024. They had the year to do it, so the end of 2024 to file it. That has been delayed. As of right now, if that is the case, you should probably look into doing it because we don't know if it's still going to be another deadline or if they're going to cancel it. So I'd recommend if you have not to do it. Most companies who opened it during the year of 2024 would have automatically done that for you. It depends on who you worked with. So a lot of the ones that are kind of hanging in the balance are the ones prior to 2024 that were open.
And yeah, like we mentioned, that's been a hot topic, and there's been back and forth. Yes, you file. No, you don't file. Yes, you file. So at the last kind of back and forth, it was yes, you file. So if you do have an LLC personally within your self-directed account, whatever the situation may be, you are going to want to make sure that you are filing that BOI for your account. Let's see. This question just came in. Well, not just came in, and I just want to address it real quick, not relating to FMVs, but just kind of on the topic of self-directing in general. Someone asked if we want to invest in cryptocurrency from our solo K, can we retain the control over our keys versus Horizon controlling them? Yes, Horizon will not control your keys at all if you are investing in crypto. We are a passive self-directed custodian, so we do not help with investments. We do not provide legal or tax advice. So your investments are entirely within your control. Our sole purpose is ensuring that they are compliant by IRS regulations, which is kind of where this FMV portion of the conversation goes, because reporting this is part of our role as your custodian in ensuring proper reporting of retirement accounts. So we report this to the IRS based on the information, but no, anything that you have that you invest in, we do not control. If it's a crypto, we don't hold your crypto keys. If it's your Checkbook LLC that you've created to invest your self-directed funds, we do not have access to your bank account. If it's your real estate property, we are not going to go and unlock the door for your next tenant. That is not something that we do, but just kind of keep that in mind. So it is a full control in your aspect. We just kind of make sure that the paperwork is in good order. And that's kind of where Carrie helps and comes in here. Um, let's see. A lot of questions coming in, Carrie. Are there any that you're seeing in there that
I can jump on one. When I came back on, it cleared the chat, but one came in from Larry again. Larry's got all the questions today, which is good. We like that.
yeah.
He asked what BOI is. BOI is beneficial ownership information, and it is specific to companies that you own or use. So if you have, it's like an LLC, including one within your plan, or if you have a solo K, the one that sponsors your plan. So it's basically reporting on who is the beneficial ownership of those companies that you work with. So it's not specific to retirement plans. So if you have an LLC that you personally own or a company that you personally own, then you should still be doing that reporting as well. And he asked what FMB is. B as in boy. I think we're not speaking it,
Clearly.
perfectly, but it's FMV, V as in Victor, and that's the fair market valuation.
Yep, absolutely. So Alicia is dropping links into the chat. So if any of you are interested in learning more, I believe she just dropped one about a minute ago, so that you can either schedule a call with our team to learn more. And if you're an existing client, you can schedule a call with our concierge team. That'll help cover as well. And that fair market valuation with a V is linked right there as well. So if you are looking to get your valuation started and get that process going for your account, you can use that link right there to start the process of at least looking over and familiarizing yourself with the form, because that will then grant you access to just understanding what it is that you're going to need to ensure your account is up to date. So with that, I guess we'll have about 15 minutes remaining. So if there are any more questions relating to fair market valuation or anything else that from a compliance aspect we might be able to answer, please go ahead and drop them. You can put them in the chat or put them in the Q&A, and we'll try to filter through them as best we can. Carrie, is there anything else in regard to the fair market valuation that clients should know about that maybe we didn't cover? Something that we overlooked during our conversation here?
Um, I can get to Larry's second half of his question as well, but I think that people need to understand that this is something that we can't do for you. I know you said it. I just want to reiterate. Um, we also need to have it every year as of the end of the year. So it's something you will do annually. We do send out reminders, but it's an ongoing thing. We want to make sure that every year we're doing the reporting correctly for all these accounts. It doesn't always happen that way, and we do report valuations that may have been the same as the previous year, but that's what we're required to do. And Larry is asking about a 5500 form, which is specific to a solo 401k. Basically, is the same as a 5498. It is our reporting process to report. In this case, 5500s go to the Department of Labor. It reports the plan as well as values at the end of the year. If you've taken a loan, like I think you have, Larry, it reports any debt or rollovers and contributions to the plan. It is only required if the value of the plan as of the end of the year is over 250,000. Anything lower than that, even if you did make a contribution or rollover, is not required to file that form. We do offer that. It is not required that we complete that for you. He asked if a CPA
Mm-hmm.
can do that. That is just fine. Just let us know. So if that's something you want to pursue with your CPA, send us an email. We'll take you off our list and you won't get that from us. You can go ahead and do that on your own.
Yeah, absolutely. And then to Carrie's point that I'll add regarding your account value. So it's dependent on the sponsoring company that is sponsoring your 401k. Some of you might be in here with a spouse who both have a 401k with us at Horizon Trust, and you are using the same sponsoring company as the umbrella of those 401k plans. It has to be the collective value of those two accounts to exceed the 250,000. So not just, if Carrie and I are business partners and we have the same LLC sponsoring our 401ks, if our collective values are more than 250,000, that's where that form would be issued. Not just if my account only has 100 and his has 150. That's kind of the situation there. So wanted to just add that little clarification there because we do get that question as well when that form does come around for its filing deadline. Lots of great questions coming in, Carrie. Another one here is a checkbook LLC necessary to invest into Coinbase? Yes, at Horizon Trust, we don't have a direct way of you to be able to invest into Coinbase directly from your self-directed account. So a checkbook LLC would be the manner that would allow you to make that investment. And then next question from Eddie is, how do you report to BOI? Is there a form? I want to say that there's a link, correct, Carrie?
There's a FinCEN link if you Google it. I honestly have never done it before. It's not something I know the process. It is still very new. I would suggest talking to a CPA. I don't know if it's something you can do online or if you do have to submit it with some sort of tax return. Sorry, I don't have too much information on that. That's something, like I said, it's a pretty new process that they're implementing.
Yeah. So it is a new process. I can add a little bit more detail on there. I have my own LLC personally outside of here, and I did have to do a BOI reporting. So it is online. It's pretty straightforward. You do submit documentation which you should already have for the creation of your LLC, and just answer some questions. It's a very simple process, but like Carrie mentioned, speak with your financial advisor, your CPA, and just make sure that you're doing it accurately and everything. But yeah, it's a pretty straightforward process to do and to get that completed. And I believe someone else just also said the same thing I just said. Online, straightforward. Perfect. Let's see. How do we get in contact with the concierge team? Alicia dropped that link into the chat. So if you are looking to speak with our concierge team to help answer some of these and other questions, you can see them right there. And then let's see here. Is there a certain amount that we need to take as a distribution if we are over 73 years old? That question comes from Janet. Carrie, do you want to talk real quick on RMDs for Janet?
Sure. That kind of ties in. An RMD is a required minimum distribution as of 73 now. If you turn 73 this year, you're required to take out a certain amount, and that is based on the end of year value as of the end of 2024. So that is another major reason, if you are getting a little bit older, to make sure that your valuations are submitted, because that does directly affect how much you're supposed to take out every year that you're required to take an RMD. There is a distribution factor that the IRS has provided on a table. You can Google it. There's a table there. It's basically a number based on your age that you multiply times or divide by the value as of the end of the year, and that's how much you're supposed to take out. So it goes up as you get older, so that you're supposed to take more out every year as you get older. Also, if you call in, we can provide you that amount based on our numbers as well. But we have to have the value as of the previous year, so we have to have a balance and a new valuation as of December 2024.
Yep. And one of the things to note as well there with that FMB is that we can only assess the value that we have here at Horizon Trust. If you have multiple retirement accounts with multiple financial institutions, your required minimum distribution is the collective value of all those accounts, not just what we are holding here. So we can only give you the value, like Carrie mentioned, of what we have assessed here as of December 2024. Uh, but but as long as you are working with your CPA or financial advisor, you should be able to account for all of those accounts to ensure you're taking the right amount every year. And then Juan asked, if we just transferred the money in December and haven't done anything yet, do we need the forms you are talking about? So I'm assuming he's referring to the FMB. So Carrie, I'll let you answer that one.
That's a good question, and I think that actually is something we did not cover yet. So
Mhm.
if we are holding liquid cash here, we have no investments, you do not need to submit that form. Obviously, we have the value, the dollar amount. Another quick or another tidbit on that is if the value of the asset has not changed, you do not need to submit that form. And that goes if it's basically newer investments. So if you had rolled it over late last year and purchased a rental property in December, it's probably okay that you don't submit that. We have the value as in within a month. That's probably fine. So if there's no changes, you don't have to do any of this. We still recommend that if you do have assets for a certain amount of time to look into new values. We don't want to be complacent about it, but there are times you don't have to submit that form.
Yeah, and that is a great point. That is something that we didn't cover. So when not to submit your FMB. So that those are some great points. Thank you, Carrie. Mm, it looks like Janet had a follow up. Did I lose it? There it is. Let's see. If we take an RMD, can we later put it back in our account as an investment?
That'd be nice.
Right?
Unfortunately, Janet, RMDs are not eligible to be rolled over. You can't put those in back in accounts. Required minimum distributions are an amount that the IRS wants you to take and keep out of your plan to lower the value of your plan. As you get older, they don't want you to not use it for its purpose, which is when you're retired to take out distributions. They want to keep those out. So unfortunately, you can't put that back in.
Yeah, absolutely. All right, everyone. We are going to begin to wrap up here. So if you do have any other questions, feel free to drop them in. We'll try to get as many of them as we can here. Just to outline a couple things before we do close out. If you are going to be doing your fair market valuation as an existing client, make sure you do so before March 31st. That will ensure that we're able to review the documents as best as possible before that April 15th deadline of the IRS and get all of that situated. As Carrie mentioned, we will try to work on everything as best as we can. But if time does not permit, then your account value will be listed for that year and not for the previous end of year. So that's just something that you want to make sure that you're keeping in mind. I would recommend starting sooner rather than later. You can check out our forum as early as today or tomorrow and be able to check that out. And then that will allow you to just familiarize yourself, make sure you're starting to the process of getting whatever documentation you need in order to ensure your account's value is reflected as accurately as possible, and will limit back and forth with our team. We will 100% assist you in making sure that your documents get completed as best as possible to the best of our ability, but that's just something that we're definitely going to recommend for you. If you did just open your account and you haven't had too much movement, as just mentioned, an FMB may not need to be required, depending on what your investment is and if there has been any change in the last couple months since you maybe started that investment. Um, let's see. Any other points that I maybe missed to recap right there, Carrie?
Larry asked another question that we can get to real fast.
Sure.
He put in quotes, invest it. I think he's asking us to. And unfortunately, we don't offer any kind of investments to put that into. Larry, you do have an LLC. So even if you wanted to put that in your LLC and put it into a savings account, you can open brokerage accounts to put it in the market. That is up to you. Unfortunately, we can't invest the liquid cash here. But one last point I'd like to say is just be patient with us. I've been doing FMVs here for a long time. It takes a lot of effort with the team here. We try to do them as fast as possible. It's not always the case. You're always more than welcome to call in and see if there's a status update. But give us, give us like 3 or 4 weeks on that. There's a lot that come in the new year. Appreciate the patience on that.
Yeah, absolutely. And that again is one of the reasons why I mentioned to you all that the sooner that you get it in, the better. Like Carrie mentioned, we do have a lot of clients, so it does take time. And then I guess it looks like that'll be it for us today. One last thing for those of you still here who are going to be joining us, I want to take a quick moment to thank Carrie for joining us today. Really appreciate you being with us and sharing some of your insights with myself and everyone here in attendance. So thank you, Carrie.
Yeah, absolutely. Thanks for having me.
Absolutely. We'll have to have you again soon.
Hey, thanks for watching this video. Hopefully you enjoyed it. There's lots more great content for you to learn and enjoy and apply to. And so anyways, click on the link below and listen to more videos or set an appointment with us. We look forward to hearing from you and also helping you.